The housing market is in an interesting situation because of how fast rates are rising. So that's what we're going to talk about today with a little help from Ben Carlson. So he explains that the rapid rise in housing prices and mortgage rates could have a lasting impact on the number of houses on the market. So higher rates have slowed down the insanity that we saw in 2020 and 21, which if you were in a market for a house at that time, you know how terrible it was. Houses would be listed and gone within a few hours, and people would be paying $40,000 over the asking price in cash. It was a crazy market. So higher rates have kind of slowed that down, but the extreme move in mortgage rates that we've been getting is going to be a problem for housing supply. So Redfin's latest update explained it. Many homeowners have been reluctant to put their houses up for sale during our market slowdown, which is now holding back inventory growth. That means buyers have fewer homes to choose from and may lose some of their newfound bargaining power, which allows sellers to maintain their list prices instead of having to cut them. So pending sales for houses are down 17% year over year. So we could be in a situation where buyers go on strike because mortgage payments are so much higher, while at the same time sellers go on strike because they're unwilling to forego 3% mortgage rates. No one really wants to buy or sell because it's so expensive right now. Even if you're selling a house, you gotta go live somewhere, right? And you're gonna lose your nice 3% mortgage that you already had. Now that doesn't mean there's not gonna be buying or selling at all, because there's always gonna be a reason to move for a job or whatever. Sometimes you have to sell and buy a house. So supply isn't gonna completely vanish. But if mortgage rates stay elevated for the foreseeable future, there could be a cap on supply in the market compared to the past. And what's happening right now is instead of people moving out, they've just been remodeling their houses to make them look how they want them to look. Because if they stay in their house, they get to keep their low mortgage rates, right? And they could use their home equity that they already have for these renovations. And I don't know about you guys, but I know a ton of people remodeling everything right now. So the Lowe's CEO discussed this on their latest earnings call. He said at this point, we're not seeing indications of material trade down. If anything, we're seeing the opposite with continued strong demand for our new and innovative products at higher price points. At Lowe's, the three highest correlating factors of home improvement demand are home price appreciation, the age of the housing stock, and disposable personal income. So housing turnover is important, but it does not index at the same rate as these other three things. So yeah, housing turnover is slowed, which means there's less buying and selling, but home prices and home equity remain at record highs. And that gives customers confidence that they're going to get a return on whatever investment they make into their homes, which is, remodeling. So it's interesting because half of all homes in the US are 40 years or older, and millions of homes were built in the early 2000s housing boom, and those are almost 20 years old now. So you could see with these aging houses, there can be a lot of home improvement. And nearly 3/4 of all homeowners right now have mortgage rates of 4% or less, which is pretty amazing. Combine this with the higher rates and higher prices, and we could see a renovation boom that lasts for years, as these homeowners decide to fix up their current place instead of moving, because it just makes more sense. So really what we might have is housing stagnation, and we'll have to see what happens if we do hit a recession next year like our models are predicting. Here's something else interesting that Ben talks about. He thinks we're going to see some amazing deals this year for Black Friday. And we know it's been hard to get stuff, right? Because of supply constraints and the supply chains have been terrible. But that environment appears to be all but over, except for automobiles, which are still a mess. But actually I saw prices of used cars actually coming down because people aren't buying them as furiously as they were. So it's the first time prices have come down in a long time. Still not pre-pandemic pricing, but coming down. But anyway, apart from cars, consumers after the pandemic shifted their excess spending from goods to services and travel. And we've talked about that in previous videos. So remember when it was impossible to find a bike in 2020? It was tough to even get my bike fixed. Well, here's a story from the Wall Street Journal. At Bicycle Habitat in New York City, lines formed down the block for whatever was available on a given day in the early stages of the pandemic. Now this owner of that same bicycle shop has 2,000 bikes in stock, more than double what he would prefer. And sales for 2022 are expected to be lower than 2019. And some customers are willing to walk out the door over a bike's color. So that huge demand in goods is gone. And the supply chain problems that we had meant that people couldn't get the stuff when they wanted it. And what happened is that retailers responded by loading up on those things that weren't available. But now what happened, now that the pandemic is over, the consumers, us, we changed our spending patterns. So Target, Walmart, and Macy's announced recently that they are starting to receive large shipments of outdoor furniture, loungewear, and electronics, the ones that everyone wanted but couldn't find during the pandemic. The problem for retailers is that these goods are delayed by almost 2 years, which could end up being a windfall for those in the market for sweatpants and couches. There are going to be discounts like you've never seen before. Inventory levels are actually so high that some of it is going just straight to liquidator stores. So a bunch of liquidator companies said that they're seeing a glut of kitchen appliances, televisions, outdoor furniture, and apparel that major chains are trying to clear out. And in many cases, they're picking up pallets at the ports or from the warehouses with the goods never even hitting store shelves. And they're immediately selling these items to smaller retailers and individuals who resell them online. So, eventually this glut will get cleared out, but now is a pretty good time to find some some deals on stuff that people could not find during the pandemic. So it's pretty interesting how we're getting through these changes in the post-pandemic economy. And if you haven't already, make sure you check out this video right here explaining why attachment is ruining your money. If you don't know what that means, good, because I'm going to explain in this video. So click right here and I will see you there.